it's bull or bear, I don't care. It's quite a rough ride, just like life. But I'm kind of patient, 'cause only time will tell.
What's up, ladies and gentlemen? Welcome. Today we're going to talk about NFTs a little bit, because this is kind of an interesting article here. NFTs are continuing to cause accounting issues even after tax season. With the filing deadline for individual tax returns quickly fading into the rearview mirror, it is tempting for accounting and financial planning professionals to put crypto assets on the proverbial back burner. A tempting option, but one that would be a disservice to the profession as the crypto asset landscape continues to develop at an accelerating rate. Only paying attention to the numerous issues that arise from the crypto asset ecosystem on a quarterly or annual basis leaves practitioners and clients scrambling for clarity and answers. NFTs might be seen by some as just the latest fad or iteration of crypto assets that need to be contended with, but there are fundamental differences that accounting professionals should keep an eye on moving forward. It's easy to understand why accounting professionals would not want to focus on NFTs specifically, as there are many other crypto issues that have arisen to prominence as of late. Stablecoins, decentralized finance, looming regulatory changes around both issues, and the lack of authoritative guidance from accounting standard setters have all combined to leave the accounting profession with the unenviable task of making standards by market consensus and best practice. Even though the crypto asset sector has moved quite a long way from the early days of Bitcoin dominating every conversation, and many other crypto accounting issues have popped up, NFTs are worthy of additional attention. Let's take a look at a few of the accounting specific issues that NFTs have created and will continue to cause for the accounting profession even as taxes fade from the headlines. Every NFT is different. This is perhaps an obvious statement, but on that can easily be overlooked. The very name of the instrument, a non-fungible token, means that by default, every single NFT needs to be assessed and accounted for on an individual basis. In addition to making this crypto asset interesting from a purchasing and ownership perspective, this makes the correct valuation of these instruments a difficult task. Okay, that's true. But so is art. If I buy a Renoir or a Rembrandt or a Van Gogh or anything like that, every one of those is different. I mean, it's ultimately kind of the same thing. The only real significant difference in NFTs and other art are some NFTs offer passive yields. Some NFTs offer... Well, some NFTs, you might have 10,000 NFTs in a series. Who owns what? What does each one accomplish? The rarity of each one. But ultimately, what does that matter? Now, NFTs that issue any kind of yield, like a DeFi yield or a profit sharing yield, or, depending on what blockchain it's on, some NFTs, they may say, okay, well, we're going to sell 10,000 of these NFTs. And then every time these NFTs are resold, we're going to divide some of the profits to be distributed evenly amongst all the NFT holders so that there's always a constant passive yield, which is actually really cool. It's something that I find wildly interesting, because everybody's ultimately not just making a profit on the potential resale of their individual NFT, but they're making a profit on the resale of all NFTs. So as that series continues to grow in value, everybody wins. That's quite frankly the model that I love. Not all NFTs do that, obviously. So there are some variables in how these NFTs are created, but ultimately in the grand scheme of things, you might have potentially two vehicles. One, it's an art asset, and then depending on, whether or not it's more than an art asset, that could define, a difference in terms. But then that ultimately would just become, I would consider that almost like a staking yield to some degree, because as long as you're holding the asset, just like staking a crypto, if it generates a passive return by holding it, well, then it's a staking asset, and it really shouldn't be taxable until you've sold it anyway, like other staking assets. That's my personal opinion. I don't know if that's how that's going to come about. Compounding the necessity of evaluating instruments on an individual basis, NFTs are also not universally issued by centralized organizations. Which that doesn't really matter, does it? I mean, it shouldn't. Combining these factors means that from an accounting perspective, every single NFT can and often does have a different valuation depending on what marketplace or source is utilized. This lack of standardization also makes financial planning, either investing or tax, more difficult and time consuming since these valuations can and often do change. NFT taxes can vary. This is interesting. Adding to the accounting complexity surrounding NFTs is the reality that the taxes assessed on these instruments can vary quite a bit depending on, one, how the NFT is created, which I don't know how that matters. Two, how the investor in question came to own the NFT. Again, don't know how that matters. You're buying an asset. It doesn't really matter. To state it simply, taxpayers can be assessed tax rates at either the ordinary tax rate, at the capital gains tax rates, or as a collectible asset, depending on the specifics of the tax situation. Well, I don't know what's better or worse for the holder in terms of taxes, but I would consider this a collectible asset for sure. The lack of standards and clarity on these issues from the IRS or other tax authorities continues to complicate these questions. From an accounting and financial planning point of view, this also means that investors can inadvertently end up owing larger tax bills than otherwise might have been planned for if any planning had been done at all. Well, no, because a lot of people are just buying the cool little pictures because they think they're neat. It's just the government's way of trying to, and to some degree, I understand it. I mean, you purchase a collectible asset. It goes up in value. I would consider that likely as some sort of capital gains, which I think capital gains tax overall is bullshit, but that's just my personal opinion. Stories abound during this current tax season of investors caught unaware of tax liabilities as a result of crypto trading activities. With NFTs only having to come to prominence during 2021, this is definitely something that accountants and advisors have to plan for as 2022 continues to roll forward. Financial reporting. Setting aside the tax-specific issues that are generated as a result of NFTs, they also further complicate the question and considerations that investors need to assess from a financial reporting perspective. This question also highlights the fast-growing and rapidly changing nature of the NFT subsector of the crypto asset space, the changing nature of the financial instrument itself. In some degree, too, NFTs can almost like an airdrop. I mean, in some cases, NFTs are just airdropped to people. They don't even know they have them. So I don't know. While it is true that NFTs might have originated as a tool or concept that was only linked or connect to digital artwork or virtual assets, this trend is changing. Tokenization of ownership over physical assets, while not a uniquely new trend or development, have been reinvigorated by the rising interest in NFTs, be it the City DAO project or physical ownership of real estate projects. The implications of NFTs linked to physical assets will create a multitude of accounting and financial related issues. That I absolutely fully understand. I mean, this is going to get, and the thing of it is somebody better speed up the process because it's only going to get bigger and worse. Over this period of the bull or the bear market cycle, I think so many new advancements and new ways of utilizing NFTs. And quite honestly, I feel like to some degree, the use case for NFTs is only limited by the blockchain that they're built on. And so as those opportunities and options, open up, especially as interoperability continues to open up and so many new kind of waves of technological advancements in the space continue to formulate, we're going to see use cases for NFTs just absolutely thrive. I mean, I truly believe there'll be a day where ultimately there's going to come a day, whether people want it or not. I mean, there's going to come a day where everybody has a digital ID. We're probably going to have some sort of little chip. It's going to store our primary wallet address with all of our CBDC tokens, and as well as all of our crypto assets. And when everything's fully interoperable, it's not going to really matter what blockchain, this came from or that came from. It's all going to be universal to some degree. If anything, it may very well end up regulated to be that way at some day in the future, because everything's going to have to filter through CBDC tokens. Everything's going to have to filter through your own digital ID so that it's all trackable. AML, KYC, it's all going to be universal. And but I think that with that, there's going to be new innovations that stem from that kind of thing, because ultimately it'll be easier for people to be compliant with the technologies that come about. So for better or worse, I think those days are absolutely coming. It's just a matter of when and how stringent they may or may not be. But ultimately, yeah, there's a lot of issues associated with it. And I think NFTs associated with real estate, that's going to be one of the next big things. And I think right now it's being tested in places like Bali and with some smaller projects, people selling, little small properties, or basically creating like an NFT REIT, where if you own an NFT, you own a percentage of the property as they're being rented out for revenue and so forth. There's so many use cases already, but it's only going to get significantly worse. But it's not really a matter of worse. It's going to be worse for the people that are trying to regulate them and tax them. But that's not really our problem, is it? I mean, it's kind of like, if they want to take our money, they need to figure out how to do so in a fair way. Otherwise, they're going to be a big revolt. So hopefully they figure all that stuff out, or they could just leave it the hell alone. I mean, because, the way I see it, well, that's never going to happen. So there's no point in even saying it. I mean, it's going to be taxed to death like everything else is, and they're going to make sure that they get their cut of anything that we as a people do. So it's just how it is. How it is, or how it comes to be, well, we'll have to wait and see. So until next time, guys, be careful with those NFTs. You never know what Big Brother's going to come for next. See you soon.